Hey guys, I'm Suzanne. Welcome back to the channel. So with all of the turmoil in the stock market right now, a lot of people are getting kind of scared. There are also a lot of people who are for the very first time Googling, how do I invest? What is the stock market? What is an investment? And what are the different types of investments that I can make? So more often than not, when people are talking about investing, they're referring to the stock market, they're referring to their retirement accounts. But if you've ever watched Shark Tank, then you know that there are also other ways that you can actually invest. So today we're going to talk about a few alternative ways that people invest outside of the stock market in order to build wealth. This isn't really a how-to, and I'm definitely not a financial advisor, but this is just more general information for you to use as a starting point as you start deciding how you want to spend your time and your money. But be sure to subscribe to the channel, and hopefully soon we can get some people on here who are a little bit more well-versed in these specific areas to talk about their experiences. So for some people, they only invest in individual stocks. Some people only invest in real estate. Some people hate real estate, but they love investing in startups. A lot of people do a combination. There are many different ways that we can go as we are learning to invest. And this is something that I'm still figuring out for myself too, but there are so many different paths and people are successful in different areas. So I think it's important to at least learn about the different areas that you could invest in and see what best aligns with you and your interests. So let's dive into the very, very basics of a few of these. And the first area that we're going to look at is investing in real estate. So real estate investing is one that you've probably heard of, but you probably won't really be able to invest in full properties until you have a little bit of capital built up and you can afford a down payment and the loan on the property. But the whole point of real estate investing is to get these properties and to use them to earn you money, and a lot of times that's very passive money. So this can make you money a couple of different ways. So one, if you have tenants, those tenants are paying you rent, you're collecting that, hopefully making a little bit of money off of that. But in addition to that little bit of money that you're making, your tenants are actually helping you pay down the mortgage on that property, and they are building that equity in the property up for you. And two, if you hold on to a property long enough, there's also appreciation of that property, meaning that the value of that property goes up from what you bought it for. So if you bought a property today for $300,000 in a good area, it's very likely that in 10 or 20 years, the value of that property would go up. Whether or not that's just from inflation or from the actual property value going up or a combination of the two, doesn't really matter. The point is, you would be able to sell that property for more than the $300,000 that you bought it for. This could really be its own video or its own series of videos, but even within investing in real estate, there are a bunch of different avenues that you can go. You can invest in single family homes where you'd likely just be renting it out to one person or one family. You can do smaller multi-units where it's a duplex or triplex or anything up to 4 units where you would be collecting rent from multiple people living on that property. Then there's also larger multi-units. So that would be like owning an entire apartment complex or a condo complex or something like that, where you would be collecting rent from many, many different people or families. You could also even do shorter term leases. So think Airbnbs, hostels, hotels. They are just renting you a piece of their property, or if it's an Airbnb, it may be the entire property, but they do that on a night-to-night basis, so that would be considered a short-term rental. There are also some people that just avoid residential entirely and they go for commercial buildings. So this would be things like retail stores, maybe office buildings, or even things like warehouses or raw land. Same concepts apply to these, except you'd be renting to business owners rather than people who are trying to live on the property. With real estate, you have to be careful and actually pick a property that's in a good location that you think has a reasonable chance of going up in value. And between renovations, property taxes, maintenance, and all that stuff, it's possible that you can actually lose money on a deal. I am obviously not an expert in this, but there are a ton of other resources on YouTube. A few good channels are Graham Stephan, Meet Kevin, Bigger Pockets has a really good channel and they have a podcast as well. And they just have much more extensive knowledge of real estate and a lot of useful resources for you as well. If you're into reading, Rich Dad, Poor Dad is a really good intro book into investing in real estate and how you can use real estate as an asset. I remember reading it in high school for the first time and like my mind was blown. So I will link that in the description, but I think that that's a really good book that everyone should read just as kind of an intro into real estate. So also related to real estate is something called crowdfunding. Now I don't really do this for myself personally, but some people have had a lot of success in it. Some people love it. So I thought that I would mention it. Just so you know, there are some caveats here. You do want to always make sure that you're really reading into the terms of the crowdfunding platform that you're using, and just do a lot of extensive research because you do want to know what you're actually getting into, and you want to know the terms of the agreement that you're signing and what they can do and what you can or can't do with the money that you choose to put into these. So when people are talking about crowdfunding, they are usually talking about a real estate crowdfunding platform. There are others, but I'm just going to focus on real estate. So it's basically where investors can put in smaller amounts of money into this pool of funding. And the idea is that that amount is a smaller amount of money than you would have to put up if you were actually buying an entire property yourself, and you don't have to deal with the maintenance or management of it. There are usually two popular ways that this can go that you can make money from it, and this is just a very, very basic explanation because like I said, I am not an expert on this, but if you want to look into it further, definitely Google it, definitely do your own research. So the first way is equity. So essentially a bunch of different people are putting money into this real estate deal and they are buying shares of the building or shares of the property. The cash flow from the property renting out or from the property selling is split among all the different investors that put money into it. So you will earn a small percentage of the profit from that property. The second way is more of a lending or loan type situation. So in this case, you would be acting almost like the bank, I guess is the easiest way to put it. So the money that you put into the crowdfunding platform would be used essentially as like a loan to someone else. So the money that you would be earning off of that would be the interest that the other person is paying for being able to use your money. And again, that's a super basic explanation. There are other types of crowdfunding, but that's just kind of to give you an overview of generally how that works. And side note on that, if you kind of like the idea of that, and I know that this was investing outside of the stock market, but I'm going to mention this anyways. If you kind of like the sound of crowdfunding, but you're like not really sure, there are these things called REITs, and you can buy these like regular stocks. They just go into your portfolio like any other stock or ETF. And what this is a real estate investment trust. That is what REIT stands for. So what REITs are essentially companies that own a bunch of different properties. So an example of this would be the ticker symbol O, which is for Realty Income Corporation. So basically, they just own a bunch of properties, like I think around 6,000 properties, and a lot of them are buildings like Walgreens buildings or FedEx buildings and things like that. But you can find REITs in pretty much any other category. They're ones that just have healthcare buildings. So that would be things like hospitals or emergency rooms. There's some that only own retirement communities. There's some that only own nursing homes. There are a lot of different areas that you can look at. And if you just Google list of REITs, you can go through them and start to research which type of properties different companies own. So the next way that you can invest outside of the stock market is by investing or lending to startups. And this is where that whole Shark Tank idea comes in. If you know of a company or of a startup that you'd like to invest in, you have a few different options of doing that. So in many cases, you would be giving the company money in exchange for part equity or ownership in their company. That would mean that you would get a percentage of their profits depending on how much you own and depending on what you guys agreed upon. So you can also earn money by agreeing on a royalty payment in exchange for loaning them money. So a very basic explanation of a royalty is like, let's say it was a t-shirt company. you would make some agreement that for every t-shirt sold, you would earn like $1 off of that. $1 of their t-shirt sale would always go to you. Or you could always just loan them money and have them pay that back plus interest, and that's what you would earn. Now, the only downside of that, if that is what was agreed upon and there was nothing extra, is that you couldn't ever earn more than that. So if the company suddenly did super well, if it was like the next Facebook, you wouldn't get any of that. You would only get your loan amount plus whatever interest they owed you. So just that straight loan plus interest thing doesn't give you as much opportunity for growth, but I suppose it's a little bit more of a conservative way that you could invest in a startup. The next way would be to invest in your own business instead of someone else's. And this is exactly what it sounds like. Basically, if you put money up front to start your own thing, to start your own business, if you stick with it and if it's successful, many times that will get you a much higher return than investing in the stock market ever could. So just to put this into a little bit of context, say that you wanted to start a graphic design company and you put $5,000 up front to start it. Let's say that included a computer, all of your software, maybe you had some marketing costs and things like that. Well, let's say that that business turns into your full-time job or a side hustle that's able to make you $50,000 a year. You just 10x'd your money, and Grant Cardone would be very proud of you. There really are not that many other investments that can get you that type of return, and no, it isn't always like guaranteed to be 10 times your money, and a lot of businesses do fail, but the point is, if you're young and you do want to start a business, that can be like one of the best investments that you can actually make. And the last way is investing in yourself, and stick with me here. So this one could be investing money, but more so, it's going to be investing time. So investing your time building relationships with people who are going to push you forward, whether that's in life or in business or whatever it is. I really do think that that is what gets you the furthest, and you can't really associate a monetary value with that. Also, investing your time in skills is a huge one. So that could be investing in skills that you need to get a particular job, or even with the job that you have, investing in skills that could get you a promotion or a higher paying job. And it can also be investing in your education. So yes, this could be like classes and training and certifications, and all of that is great, but you're going to learn more from picking up and trying things that you are actually interested in and that you actually want to learn more about and further your skills in. Spending time on those things will often give you new opportunities and open up doors that weren't really there before. So that's definitely a really good way to invest your time. And if you look at examples of successful investors, what you'll see is that there are just a ton of different ways that you can have success in investing. But something that I see as a common trait between all of them is that they are very intentional with how they spend their time and how they spend their money. They spend the time to really go in depth with whatever they're investing in and really study it, know it, experiment with it, research it. So I think allowing yourself to have the time to actually explore your different options with investing is probably one of the best things that you can do. So if you enjoyed this video, be sure to subscribe to the channel, be smart with your money and your time, and I will see you guys next time.